Hey, what's up, everybody? It's Omar. It is Sunday, April 15th, 2018, 9:40 a.m. in the morning. And before I go get started with my day, hit the gym, do the things I need to do, I want to make this video talking about my watch list for tomorrow. I'm going to review several things in this video, so, take notes. I think I'm trying to get the light bell to ring for people to get a real understanding of how to trade, and not just trade anything. Have a strategy and just stick to that discipline and only trade your specific strategy, whether it's long or short. Either it's buying dips off support, clear support levels, buying breakouts that hold support and taking them long, or shorting, which I prefer. I think the edge is in shorting. I think it's a lot easier. I think it's a lot less stress, believe it or not, even though people will tell you the contrary, because shorting, you could technically lose all your money. But if you have a risk plan and you stick to your strategy, you won't ever really have to worry about that. With that said, yesterday I spent a lot of time throughout my day. I did my, I'm like obsessed with the videos and like watching others and just kind of just gaining as much knowledge as I can. And yesterday I spent a lot of time like rewatching, and I advise you to watch them. Tim Grittani has a YouTube page, and he shows you a lot of his different strategies, like shorting into resistance or buying breakouts on OTCs. And it was interesting. This video where he was talking about how he made 20 grand because he takes a tremendous amount of size. That's why he's taking the money. But he was talking about in this video,
a lot of
which is
DVD,
and I have
ticker
a
trade.
little bit of a
Importantly,
different philosophy.
career, so I'm really glad I got an opportunity to include
FNLMA, and he was talking about how this stock on this day was ready to break out, and it was on an upward trend. So he immediately buys the breakout, and when he buys the breakout, which I don't subscribe to, I always tell you don't buy the breakout. I always tell you want to see the breakout level get tested before you buy. And it was interesting. What I like about his videos is that he talks about level 2. So if you're struggling with level 2 and how to read them, watch the videos, because he really talks about how level 2 works. That's why they're really, really good videos. But here he talks about
a little bit of a choppy start to the breakout,
right at that 260 level, and he gets filled some, but not all. And which I do not subscribe to. I want to see it pull back. And if you notice, the stock in this video gaps up, and I'm just forwarding it through, gaps up to this 265 level, and then guess what? It pulls back. And on the pullback, when you get that test, that is where I tell you. And you see, look what happens here. And I'm just forwarding it through. 260 was the breakout level, and he that's what he says buy. I don't tell nobody. If anybody that watches me, I always tell them don't buy the breakout. What you want to see is gap up and pull back and retest that breakout level, which was resistance, and now it clearly becomes with support. And you can see it got back down to 260, held that 260, actually broke below it for a second, got to that 259 level, held it, and then look, and that's consolidated right here, which is consolidation, and then it takes off, and then it breaks out. And you can see here it consolidates, and then it keeps going, and sure enough, eventually, it breaks out and it goes. That is what I teach. If anybody
I'm building a little bit of a cushion on my position.
That's the difference. You never want to, in my opinion, even though he's a phenomenal trader, you don't buy the breakout. You want to see the breakout happen, and you want to see the pullback and test happen, and then buy the breakout. So I was watching these videos, and it was interesting how I evolved over time, because before I would have just bought the breakout like he would, because I said, oh, he knows, he's this phenomenal trader. But I so subscribe to that, and it's interesting how I evolved over time. And it was just interesting watching him. I was watching a lot of his videos. I watched a couple of Stephen Duck's videos. I got his DVD. I got it on eBay for like $30. People, and it was, so I no way I would ever pay $900 for a freaking DVD. It was interesting watching Stephen Duck's DVD. His video. So if you watch my videos and his videos, we trade the same patterns, exactly the same patterns. Is that he goes into a lot of detail about like position sizing, and he does a lot of analysis on because he tracks a lot of the trades and stuff like that. But it's the same shit. So, you know, it's interesting just watching all these videos, and I feel a lot more confident after watching all their videos and watching my videos. I think mine's are just as good, if not better, because I really go into more of the chart, really explain things in more detail. But with that said, let's talk about, so anyway, you know, every time I think about canceling my page, I always see that I keep growing. So thanks, guys. You know, I see my page is growing, and on Twitter I just broke let me go back to, I just broke 2,000 followers, which is pretty cool, man. You know, like, I'm up to over 2,000 Twitter followers, which is pretty neat, you know, for a person who doesn't really you know, like I'm not part of any group or anything. I'm just, you know, doing this just because people ask, and I just been doing it. You know, I can't promise you I'll keep doing this, but I mean, as long as the interest is there, I'll do it. But once I see the interest fades, I'll probably stop. But with that said, guys, I have a ton of videos here, right? I have, if you go to my playlist, you can see I have, you know, I don't know how many now, 100 videos, like somewhere around here, but I got over 100 videos. And it's interesting, if you watch my videos back from 2016, when I started doing this in December 2016 and 2017, you know, you can see how I evolve. If you really want to get the gist of where my training has gotten to me at its highest level, start from January of 2018 and go all the way up to April, and you can really see how, you know, I've really simplified my trading. And you can see I used to use all these indicators. So with that said, let's talk about, before I go into the watch list, I want to talk about something, trend trading. I'm going to pull up Macys. And I'll use Macys. And the reason why I'm using these high price stocks is because I know that, I just want to show you that, because I always, you know, use a lot of these penny stocks, but I want to show you the higher price stocks. It's the same strategy. So let's go into Macys, and what I'm going to do is I'm going to pull up, I'm going to clear this out. Let me just clear everything. And I want to talk about trend trading, all right, and what I've been talking about. So Macys is a retail stock, and this is the 1-year chart. Has been gapping up all the way up to $31, and it topped out at $31. And you can see, you know, it kind of broke this trend, and then it gapped back up and it retested at 31, couldn't break it, and now it's back on this downward trend. Now, when you see stock gapping up, that's fantastic, because what you want to see, the higher it goes, the higher it falls. So I want to show you guys something. Let me do let's do the 30-day 5-minute chart. All right, so this stock right back March 23rd started at $27, right? And it's gapped up all the way to peaked out at this $30, right? And you can see over the last year this is high. Now this is what I want to show you when I talk about support and resistance. So this is the first red day, right? After it's peaked out at that 30.98 level, right? So, all right, it had its first day. And in theory, you know, you get a target short on the first red day. But let's talk about the day after, which is where I always tell people it's a lot easier to trade, okay? So here on this day was April 6th, right? This is where it topped out, right? April 6th, right? And this is the top. Here it had this pullback here, right? So it's a clear support level here, and then it broke down below, and you got some support here, and you got some overhead resistance here, right? Okay, so this was the first red day, and let's see it, some consolidation here. If you notice, that consolidation also mirrors these areas here. So if you notice, it's no accident. You see, it's no accident how it actually starts. So that's why it's always good to look at a larger time frame. See here, you got some good, so you can kind of see where things are consolidating. These are the clear support and resistance levels, right? Okay, so now this was the first red day, right? So what happens on April 9th, right? I'm gonna zoom in here a little bit more. April 9th, what happens? Look at this, April 9th. Stock market opens, look, gaps up. Look at this clear, right? Which was a support level, now becomes resistance. Can't hold it. This is where you're going to start attacking it short. Look what happens. The stock bounces off a previous support level, right? Gaps back up, and look, cannot break that 3014 level, and you could have just attacked this short. And if you notice, on the downward trend, support now becomes resistance. So look, gaps down, gaps up. Look, this is that $30 level. Look at this, can't break this. This was a previous support level, right? Look at this, can't break it. So you can go short here, and look, lower highs all the way down, breaks down. Look, and then the day after that. So this is 2 days after the initial collapse, right? Look at this. Can't break 29.69, which is another so was a previous support level, which was support here. Now is acting as resistance. And look at this. Tank some more, right? Now, if I go further back on the time frame, let's see. Look where it bounces off. 2882, which is this huge consolidation level. That's why it bounced off that, because this was another previous support level where there's a lot of support. So it bounces, but look, gets rejected by this level, this 29.43 level, which was a clear resistance level. You see, if you see, there's a lot of overhead resistance, and look, gets rejected, and it keeps going down, and it just keeps doing that again and again and again. Look, what happens is the next day can't break above this. Look, trends down, bounces off that 28.22 level, bounces back up the day after, but cannot get above this 29.43 level. Consolidates right at that 28.32 level. The next day kind of gaps up, and look, there's a lot of right here, this 29.09 level. It's a lot of consolidation here. Okay, and look what happens. Touches it, spikes down, gaps up, can't hold it, and then collapse some more. That's all stock trading is, guys. So when you see stocks gap up, that's where you should be salivating, because you know at some point it's gonna pull back. All right, it's gonna pull back, and this is what I always tell people. On the yearly, I like to look at the 50, the 200 and 300 simple moving averages, because the further away a stock moves away from the 50 simple moving average, eventually it's gonna touch it. All right, it has to come back to it, gravitates back to it. And I use Macys just to show you how you can attack stocks on the short side on a downward trend after a ramp up. All right, and you could do the opposite, going long. So let's say you're looking at the stock, it's trending up, and here is the, let's say, okay, this was the high, right, 30.41. So you're watching it as it trends up, and you see, okay, this was a critical point, because at this point it got rejected and tanked. So you're looking to buy that breakout of that high, which was actually 30.42. So you watching it, and you see, you get the alert because you set an alert there, and you see the consolidation come in, and there's a 5-minute time frame. Now let me put 5-day 1 minute so you can see it a little better. Let's zoom out. Oh, I'm gonna have to do 10-day 1 minute so I can show you 10-day 1 minute. Okay, so here we go. So right, so you see that consolidation happening, and once you see it gap up, you see the sideways up. You see how it's trending down, but now it's holding this level here, and boom, there it goes. Look, it comes down, and what happens? It retests this level now, which is a clear support level, holds, and you could just roll this up. So that is how you can, you know, trade the opposite when you go long. Okay, you want to see breakouts happen, and you want to see it hold as support. All right, so that's how you trade trends, guys. I prefer shorting, but you know, I also go long. You see on my call outs all the time, I call a lot of stocks out long, and you're gonna see on my watch list video for tomorrow a lot of these weed stocks I have here, because I'm looking along these, a lot of them tomorrow. Now the way I find my stocks, there's a lot of ways to do it. You can go to FinViz, and I'll just do this again just to show you guys real quickly. All right, so you go to Screener, and you go to All, and then, you know, you could make this however you want, but basically what I do is I'll look for stocks under 50 bucks. Sometimes I look over 100, just really depends. And then I want my volume to be over 1 million shares traded for the day. That generally is up 3%. But you can, you know, modify this depending on the, you know, the day and the Dow and all that. And then you get all these tickers. And then, you know, what I like to do is like filter most by what was the most volume traded. And then once I got the filter up there, I go to charts. Oops, I go to charts. And then I go to candle right here. And then basically I just look for stocks that are upholding their highs. Like so when you see stocks like this, like rig, oil stocks are up because oil hit its yearly high. So you're gonna see the oil stocks are running. I posted that maybe like a couple of days ago. Watch all the oil stocks because they keep running. But eventually oil's gonna pull back. So when oil pulls back, guess what? All these oil stocks, rig, will, I think any, these are all oil stocks. You'll be able to attack them short, you know, using the same strategy that I just showed you on Macys. You know, the higher it goes, eventually it's gonna pull back. You know, and that's what I do. I just look at these stocks, and I look at for stocks basically that are up with, you know, big green candles holding their highs to potentially make trades on. You know, I'll look at the chart, and then I'm making a, you know, like look, there's a stock here like ABEO. Look at this. It is just gone crazy. A stock like this I would look at. So let's say ABEO. So I put ABEO up. And right, and this stock was actually, you know, I've had alerts set here at 1720 and 1890, and you know, I didn't trade them, but shit's been running, and they've been running because of, you know, oil. This is actually not an oil stock. I think this is a pharmaceutical company, if I'm not mistaken. Let me go to analyze. Yeah, it's a therapeutic company. It's a biotech company. Biotechs, you know, they run crazy. Now, what you want to do is, right? So yeah, I'll put it up here on the bigger. Let me put up this other chart here. Okay, I'm gonna put up the 1 year chart just so you can see it nice and clearly. So this is a stock that's been on a tear, right? You gotta expect it to exhaust itself. It's gonna pull back hard at some point. And what you wanna do now is say, okay, maybe I buy the breakout, but I wanna see where the overhead resistance is on the daily. So that you got overhead resistance here at 20 bucks. And it's close to that 20 buck level. So you would put, right? And then you got some more overhead resistance on the daily candle here at 20.35. Right, so you would want to map that out. You know, and then you got, and then if it breaks that, there's really, this thing could potentially run. Oops, 20.35. Right, so you have those overhead resistors there, and on this candle here too, it hit a high of 20.40. So I mean, you know, and it didn't hold. Now you also want to see how much volume was traded that day. So there was 2 million shares traded that day, and then on this day there was 998,000 shares traded. And on this day it was 3 million shares traded. Well, this has been 1 million shares. So in order for it to break this $20, the whole day it traded over 2.4 million shares. On this day, it traded 1 million shares. It's been trading in the 1 million share range. So it's gonna need some volume to break and hold $20 and this level. So tomorrow I would potentially be looking for a stock like this. If I was looking at this, this is what I would be doing. All right, I want to see, because $20 is that high, I want to see what it's gonna, how it's gonna react to 20, and if it maybe it touches 20 and it can't hold it, I could take a short risk in 20 or that overhead resistance of 21.40. You know, because it's so overextended. And when you look at the 1 year again, let me put up the 1 year. Okay, look at where the 50 simple moving average is. It's over here at $14. All right, stock, look at this. Every time it's gapped up, look down here when it was like $4 here, it gapped up to about 10, but eventually found its way back to the simple moving average of 7. It's been on this run. It went on a run all the way up to 22, and then it gapped down, and eventually it found its way to the simple 50 moving average of $16. You know, and it's kind of been riding, and then it got up to $18, and then it completely tanked to 10, and now, you know, it's back up to this run. So, you know, every time it has a run, it has a big pullback, right? And this is where you want to get in on the short side, where you want to attack. Every time, you know, it ran and ran, then it consolidated here. It got up to 18, then it had this huge pullback. It got up to 22, then it got this huge pullback. So, you know, it got up to this $18 level and $18.90 level last time, and then got to a huge pullback. Eventually, this thing is going to have a big rip on the downside. And, you know, it's looking like it's approaching that level. So you definitely want to put it on your watch list to see, to potentially short it if it can't hold 20 or 20.35. You know, if it breaks above though this level and holds, you know, it could run and test $22. So that's where you want to look. You want to see, okay, is it going to get rejected by this and pull back hard, or if it breaks above this 20.35 level and holds, shit, there's nothing really stopping this from going back up, you know, to this $22 level. So if I put the 30-day, let's do let me zoom out. Let me do 90 days. And I'm sorry guys, I know this video's, you know, longer, but I'm just trying to give you guys good information here. That's the only thing I don't like about Thinkorswim. Unless one of you guys know, I can't like get it to scroll. Yeah, see, I can't get it back that far. Let's see. Let me try. Let's do 180 days. Okay, yeah, I have to just do this. Yeah, you see? And on this, if it breaks 20.35, right, which is the high, look, it can, look at this. It had this crazy spike. I mean, this happened really fast. It didn't even hold it, and then it tanked. So this is telling me that in this level, it's going to break down. I mean, I don't think at 20 or 20.35, you're going to get a nice wash. So you should watch it. That's what I do, guys. Now, if it broke 20.35 and held, then you know what? I'd probably take it long. And that's how I make the trades. That's all I'm doing. I'm just making trades based off support and resistance. This is a stock that's volatile, it's up. But on the downward trend, it's going to be a great stock to short. And if you look on the upward trend, you know, every time it broke a high, you know, daily high, you saw the next day it gaps, you know, breaks above it, pulls back, holds, and keeps going, you know. So that's how I make my trades. All right. So I hope this is helping you. Now let's talk about let's talk about tomorrow's watch list. All right. So the reason why all these stocks, I put down these marijuana stocks is because there was you know, the senators have been talking recently about marijuana legalization. So there's been some news about it. So Boner and a couple of these senators, they're looking to legalize marijuana, you know. So that's why marijuana stocks are running, you know. Boner and Trump are looking to maybe legalize it. That's what caused the stocks, the marijuana stocks, to ramp up Friday. So, you know, I got them all on my watch list here. So let me pull up. Now you got to be careful. This is the 1 year, and this is the 1 year chart. This is the, you know, the daily chart, the 5 minute. Let me pull up the. Let's do this. Let's do the 30-day 5 minute chart. So, you know, this is AMJ is a shitty stock, but it's being pumped. So there's no reason why this thing can't run tomorrow. So what I'm looking to see tomorrow is, you know, it tested 120. Now on the yearly, it's only got to a high of 153. So you got to be careful. And there's some overhead resistance here. But if this thing could tank tomorrow and pull back to like this 104 level, which was the previous consolidation area, right? If it held, you could go long and just ride this up to that, back to that 120 level. Or if it broke down to 95, you could potentially take a swing and then see if it's gonna go to the next leg higher. If it held 120, you could go long, but just be careful because there's a lot of overhead resistance. I mean, there's better stocks to play than this, but you know, I mean, if it's an easy trade, why not? You know, so I just put on watch list just cause. It doesn't mean I'm gonna trade it. It just means that I got an eye on it. Next up is here, HEAR. This was a stock that, you know, a few days ago spiked and got to a high 575 and then tanked. Now, if you look at the 1 year chart, okay, if we look at the 1 year chart, this is a stock that every time it gaps up, it tanks. It doesn't hold its highs here. Let me pull up the bigger chart because I know it's easier for everybody to see. I'll just go back and forth. So, you know, every time the stock has spikes, look, spikes, crapped, gapped, crapped, gapped, crapped. It never holds its highs. But the thing that's interested me, and the only reason why I got on the watch list, is because it's found its support here at this 276 level, and it's starting to gap back up, you know. So I would want to see, right, we have these key levels mapped, and you know, really I'm looking to potentially short this back down off a resistance point, but doesn't mean you can't buy a breakout. So right now it's gapped down to this it's holding 398, but if it pulled back and held 375, which is you know, a clear consolidation level. So here, let me pull up 375. It found some support here, and there's actually some support here at 350 too. You know, it could be another potential area that you may want to potentially buy a dip. If it gapped down and held one of these levels, you could buy the dip because maybe it continues up, you know. And you know, you when dip buys, you get in and out quick, you know. You're just looking to get in and out quick. Now, what I'm really more concerned with is I want to see if it breaks $4 and holds. You know, you could take it long, but look at potentially 420 and 450. These are levels that could potentially. Let's do 5-day 1 minute so you can see it a little easier. These are levels of consolidation where there's some clear resistance. This is how I found these levels. And you know, 451, these are levels that you could potentially get rejected and just tank back down. But if it held, you could go long, just looking at the next level to potentially as your target. And that's how you make these trades, guys. For me personally, I'd rather see the spike and just you know, see it get rejected and then short into the rejection. You can see, like, at the end of the day Friday, it spiked and got rejected right into the resistance level right above, you know, because there's a lot of consolidation here at this level. And then it just tanked, you know. So you could probably, you know, you can expect maybe it's just gonna crap all the way back down. But we'll see. You know, you just gotta watch it just to see what's gonna happen. Maybe it breaks through all those levels and breaks 450 and runs again. I mean, it's possible, but I doubt it. Just based on looking at the yearly chart. Okay, so that's here. Next up is Can. Now Can is one of these turds that when it runs, it runs. Look at, you know, when all the hype was last year. And I saw this. I actually could have went long on it Friday. I just you know, didn't really have the time. Now this stock went from, you know, 108 to 11.19. All right, and this started back in October of last year, and you know, went up to a high of 11.19, and then it crapped and it found its support here at $2, and now it's just been running again because of the news. So what I would be looking to see tomorrow is, let me do the 5-day 30-minute. So what I want to see tomorrow is if it breaks 470 and holds, take it long. Now this you should be, if you're looking along, I would probably look at this stock as maybe potentially the #1 stock to long, because it may now what may happen is the market may open and it may pull back and it may like kind of come back and test this 435 level and then, you know, bounce off it and then just run. All right, so you may see that happen. Or maybe it tanks. Maybe the news is bullshit. I'll create an alert. I didn't do that. I'll put this is what I do: potential dip buy at 435 or short rejection. And I just say that. I may not even short it. You know, you have to be able to find the shares to short. But I think that if we look at this now, let me zoom out here. If we look, I gotta call across. You know, there. I hate that I can't. That it doesn't let me. Just gonna have to do the 180 days, 4 hours, so I could go higher. All right. What you gotta check to see is if it breaks that 470, the next area, clear area where you gotta be it could potentially be rejected is 519. So that may be your price target is 519. You gotta see what overhead is where there's consolidation, because that's where the stock may get potentially rejected. And you can see right here 519. All right, that was on 1212. It got up that high and then got rejected all the way back down to 230, and then it got back up and then, you know, went on a tear. So that should be your goal, 519. If it breaks 470, it could potentially, you know, test that. I mean, there is areas of resistance here at 496. All this could get rejected here at this 490 level. But I think because of the news and the hype, this could potentially break $5 tomorrow. There'll be a lot of people buying it just because they're looking at the chart and just seeing. All right, so map that overhead resistance. All right. Next up is Buds, another dog shit company that, you know, went on this crazy run from $2 to $15. Here, let me pull up on the big chart. So it went on this crazy run, you know, and you know, history has a tendency to repeat itself. So, you know, it went crazy. I remember trading this. This shit went nuts. Now, what I would be looking to see is, you know, how it reacts to the, you have some clear overhead resistance here at 616, you know, and some other areas below it. Right here, there's some consolidation here. But, you know, if it held 555, you know, and it broke it and held, take it long. Okay, tomorrow look for, or if it pulls back and holds this, you know, previous day's high, which is should be a lot of support, 539, you can buy the dip and take it long off that. Okay, and there's some good support here at 460 as well. So, you know, let's look at 30-day 5-minute. Yeah, so just be mindful of that. You know, you got some overhead resistance, you know, right here at this. You got to be careful. There is overhead resistance here at this 564 level. It could test it and reject it, but I think tomorrow it's gonna rip. It's gonna rip because, you know, if people are buying into the hype, people are just gonna start buying these stocks tomorrow. ACBFF is another one. This I like because, and this is another stock. If you want to feel more comfortable trading a better company, you could trade this stock tomorrow, because what I like about it, if you look at the chart, it's in a channel. Let's do the 1 year, right? This stock went from, damn, this thing was at 0 cents. Imagine you was here like 1 million shares and went up to 1230. Jesus. Oh, that's a glitch. This is like 140 to 1230, and then it, you know, tanked. Now, if you know, you do have some overhead resistance here at this 748 level, so be careful. You know, they got some overhead, a lot of consolidation here, but because of the news, you know, you could be comfortable trading it. Now, what I like about it is that it's in this channel, and if it could break above 702 and hold, you could take it long. Risk is 702. Now, just be mindful that 715, there is a lot of, you see this? There's a lot of overhead resistance. That's why they couldn't keep growing. Look at this. Look at this consolidation. That's a lot of resistance. It could get rejected, and you could short off it. Maybe, you know, if it can't hold it. But, you know, just be mindful. If you buy that $7 level, it's gonna need some volume. But the good news is that there's not a ton of volume here, even though there's a lot of resistance. In this level, there's a lot of volume, but here there's not a lot of volume. So if you get a lot of volume tomorrow, this could break it pretty easy and just keep going. Look at that 740, 750 level as your price target. All right. Next up. It just does not want to die, but this should have you salivating, because if we pull up the yearly from a 1 year time frame, it's approaching where it peaked out last time. All right, and you know, sometimes you want to go further back. Like you could say, okay, let me see what it's done over the last, let's say, 10 years. You know, and this is a stock that was at $26 at one point, and you know, it does have a lot of resistance here at the 758 level. You know. But if it could break and hold it, I mean, it could potentially, you know, break $8. But you gotta think at some point this is gonna, you know, it's so overextended that it's so due for a pullback. That red day wasn't even really a red day. You know, it faked everybody out. It just kept going. So, you know, it would be interesting tomorrow to potentially short this. Tomorrow could potentially be the first red day, considering it just keeps going and going and going, and it is heading towards that critical, you know, high of 747, and then, you know, you got that 758 level. So see how it responds tomorrow. What I would be doing is I didn't map anything, but I would put an alert at 735, and then to see if it breaks and holds, but looking for potentially short it if it can't hold and gets rejected in one of those levels above it. Right now it's holding 708. And you know, you gotta look. So here it's very choppy. It's hard to get a real good sense of where to potentially dip by it. It got some good support here. I would say $7. If it held $7 right in the $7 area, you could potentially dip by it. But if it can't hold $7, you know, it could finally tank and get that wash that we've been you know, waiting for. So and it's an easy to borrow stock. So just keep your eye out on to see to potentially short this, because the short is going to be great. When this thing washes, when people take profit, I can see this getting back here to the 611 level, just because it's just so due for a pullback. So just keep an eye on and obviously, you know, look for potential dip buy, because if the fundamentals are good, I haven't really checked, then, you know, maybe it keeps going higher, but we'll see. All right, so you know, and then you can map your there's some good support here at this consolidation at this 680 level, and then you can look here at this 654 level. So these are the areas I would map for potential trades. All right, next up, EXPR. So Express is one of these companies, you know, shitty. It's a shitty clothing company. Well, I don't know. I think it's overpriced. The clothes are overpriced and the quality is not that good. But let's pull up the 1 year. 1 day. Now, looking at the stock, what interests me is that it does have it has a gap to fill here at 894. Actually, 888, 889 level. So what I would be looking to see is if it went long. Now, it does have some, you know, you see right here at 847, it could potentially get rejected there because there is some consolidation here. But this is going to pull back at some point. I mean, this has just been running. And you want to see it eventually get rejected in one of those overhead resistance areas. So what I did was I didn't put the alert, but if it breaks above 831, you can take it long, risking 831. But just look at that overhead resistance, because eventually it should get rejected. Or if it can't hold 811, you can take it short. But you know, just be careful, because you do have some underhead support. But this stock, I've traded this several times. When it finally goes red and it finally gets back its gains, let me pull up the other chart. Sorry guys, I'm just really tired. When it kind of pulls back, you can notice here that it really does pull back hard. So eventually, when you catch the downtrend, you're gonna be able to take this for a nice short over several days. I mean, me personally, I want to see it go higher. I want to see it get, you know, into that $10 level if it can, so I can potentially short it back down. All right. So next up is APHQF. This is I think this is another weed company. I'm not sure. It's another weed company, and this is again another stock that, you know, like all the weed companies, they could be running tomorrow. I have my, you know, you could take it long if it breaks above 953. If it can't hold it, you can short it, risking off that. There's some support here at 930. I forgot why I put. Oh yeah, 934 right here because of this, and then, you know, 875. So it's in this channel right now, but because of the way weed is running, and it's moving, it could potentially start moving again. So keep an eye on that. GE. Now, what I like about GE is that GE is a company that, because they don't offer dividends, it's been tanking, and this probably will continue to tank. But what I liked about this is that, you know, it over. Let me pull up the big chart, make it easier for you guys to see. So, you know, it found its bottom at 1273, and it's had 4 green days, but it did have 2 big green days, and then it got rejected and continued tanking. See? So what I'm thinking about here is, you see it has a lot of overhead resistance, and I think the stock can continue to keep tanking. So what I would want to see is when the market opens tomorrow, I want to see, is it going to break the 1338 level? But I want to see how it really reacts to this 1345 and 1349 level, because I think it will get to this level, get rejected, and get back down to below $12 so you can short it. It's going to need a lot of volume to break this. All right. So that's what I'm looking. That's what I'm looking to do with GE, potentially. And GE is such. It's so liquid that you can put as many shares as you want. I mean, you're gonna get executed super fast. MRO is one of these oil companies. Again, it's getting close to its yearly high. You know, I'm curious to see how it's gonna react tomorrow. You know, see if it maybe spikes and gets rejected, either this 1834 level or 1850. But if oil keeps rising, it could break those 2 levels and just keep going. So look for a potential long if it breaks above 1834, 1850. Just remember the overhead resistance. Next up, IQ. IQ is a new company, and, you know, it's been on the market a few days, and it's just been on this green tear. So it got rejected at 1950. So I'm looking to see if it breaks 1950 and holds, take it long. If it can't, short it, risking 1950. Very simple trade. All right. Next up is ESTY. Now, I put one of these stocks just to show you the first red day strategy, day after first red day strategy. So keep an eye on this. Let me pull up the big chart. I'm just trying to finish this because I know this is a long video. So this thing had a huge red day, right? Went from $30.97, closed at $28. I mean, it completely tanked. So now what I'm assuming is, let's do the 30-day 5-minute chart, because this stock has, you know, been on a tear from $23 to $30. That it may be the beginning of a downward trend, maybe. So what I'm looking to see is these key levels above 29.26, 29.59, 30.04, 30.36 to get rejected. So if I want to see if it breaks these levels, you could take it long, but then your potential exit should be the next resistance level above. But what I really want to do is see it get rejected, like spike, have a morning spike and get rejected into one of these levels and then take it short, because maybe it keeps tanking. Like tomorrow, I wouldn't be surprised if this got up to 29.59, got rejected, and then broke below 28 and just keeps tanking more. Because I'm looking at the yearly, and, you know, this thing has been on a tear from 16 to 30 bucks. And look at where the simple moving average is, $24. All right, it, you know, so look, last time it had a rip like this $9.90 level, it went to $14. You know, consolidated, but eventually it touched it here, gapped up, consolidated over here, gapped up here, then, you know, gapped down. So here it was like a 21, and then it came back down to 19, broke below it, down to 17. So, you know, that's just a thing that I do. Sometimes when I see a stock, or, you know, so overextended, you know, you think it's gonna have to find its way back to it at some point. There is a lot of support here at 26. So maybe, you know, it keeps breaking down, but just be careful here at this level. You want to see how it reacts to this 26, like 57 level. So let's see tomorrow if I'm right. Let's see tomorrow if it gaps up, gets rejected into a key resistance level, and keeps tanking. All right. So we'll watch that, just like when I showed you Macys. And then FTI was the stock that I had on Friday because, you know, it was up. And, you know, it has these gap to fills below. So let's pull up the 1 year. So, you know, it had this big move and it has these gaps to fill. So I thought, you know, it had its first red day. So I thought it was going to be a great short and it was going to get tanked down. It kind of held. There was an opportunity to short it. You just had to be real patient because it was choppy and slow, you know. But let's pull up the 30-day 5-minute. So this is where, if you know, I had put this on Twitter for everyone to short into a key resistance level, and 3264 was one of those levels. I actually, like again, I talked about how I shorted in this 3040, 3040 and 3240 level because, you know, there was some good support around this level. So, you know, I had mapped my support and resistance levels, and I had like a 5-day 1 minute. Let me see if I can do it here. Yeah, so when I originally did this, you know, I had mapped this as a potential level here, and there was some consolidation here, and then like right around here. So what happened was the market opened, and you know, I saw it touch here, gap down, held 3214, gapped up, and I just, you know, shorted because I saw it couldn't hold. My expectation was that it was gonna break below this and it just tank. That didn't happen. As you can see, you know, it kept holding, it triple bottom, gapped up, but look, eventually it got rejected here, 3264, and then, you know, had this nice fade into the close where you could have took it down. You know, I didn't short that. I saw it and I could have, but I didn't because just too much going on at work. So my expectation is tomorrow, same premise, that, you know, my expectation is it's probably gonna spike into one of these levels and get rejected and then really fade. That's just my guess. So track it, see how it works tomorrow. All right, folks. So that's what I have on watch tomorrow. You know, there could have been more stocks that I could have watched, but that's what I'm looking at. I mean, to me, the ones that I'm really most tempted by is to see ACBFF long over 7. I would love to see how that reacts. I would like to see how it reacts if it breaks 470 to take it long. Those two stocks I definitely would be looking to long because you guys think all I do is short. But you guys who follow me on Twitter really just know that's not true. I do quite a lot of plays long. But those are two because of the news for weed. But I'm curious also to see how GE reacts and gets rejected into this 1345, 450 level. If it rejects and it just continues to tank, that would be interesting. I would be interested to see that. I would be very interested to see how IQ reacts to 1950. Sorry, my internet be acting up sometimes. And actually, I think this is Thinkorswim. If it can break 1950 and hold, I'd be curious to see to take that long. And then, of course, I want to see how FTI and then ESTY reacts tomorrow for potential shorts into a spike into a key rejection area. A rejection of a key resistance area from a morning spike. All right, folks. So I know this video is a little longer than usual, but I hope you find it useful. Map those support and resistance levels. Create those alerts. Make sure you subscribe to Thinkorswim. They're fantastic. Again, what I do is, just to show you, I have this message center, and let me just detach it so you can see. What I do is, like, it'll just alert me. So right here, it'll alert me anytime a stock touches one of the key levels. It's awesome, and it goes to my phone as well. And let me go to Watchlist. So here, like, I don't really advertise it, but see, I have all these active. Look at these. These are all active alerts that I have for stocks that, you know, could potentially test my levels. You know, things may not happen for weeks, even months later, but you know what? I have everything set, so when it hits, it alerts me, and I make a lot of trades that I don't even post based off these alerts. That I'm just waiting for things to happen. You see, I got tons and tons of them that are still active from all the way back in March. All right, it's fucking awesome. All right, so even as far as February, just waiting for these things to hit these key levels. All right, so I hope you found this helpful. I know this was longer than usual, so like, subscribe, share, and let me know what you think. All right, have a good weekend, guys.